All right, friends, we are back for another little bit of a recap here. We are a little bit stagnant on videos and not pushing them out as fast. If anybody's not part of my premium group for our paid service and just knows me from here or some of the past YouTube channels that we've featured on growth, I was diagnosed, unfortunately, with stage 3 cancer. So a little bit of a lifestyle change difference, a little bit of some rearranging, but we will get back to it. We will beat it. We will be just fine. And that is the mindset that we have to keep. So let's get back into the recaps here. Hopefully I can manage to not hit fatigue and continue on with these breakdowns. Now, let's talk about today. We had an outlook that we had a little early bounce morning up to some of these other algorithm watches. Now, this is SPY, okay? So SPY came up from yesterday's lows and our 7860 Fibonacci. We've held these for quite some time now. These will play out very cleanly as everything is promoted there on a multi-level time frame. So from the weekly to the daily, they will reuse them over and over and over, top and bottom. So we went long out of the gate here and into some targets. The first two targets are yesterday's close and the 100 EMA, the 5-minute. We got both of our long targets on dip buys. We traded 3 different times there on some small size starting the week, 700 and some dollar win, not too shabby. Now, let's talk about what's happening in the prediction. I don't really care about the day trades today. The bigger move that's coming, okay? So let's back up here a little bit. Let's go to that 30-30 real fast. So as you guys seen the prior prediction videos way back when, it's been a while, but we were over under the 50 SMA daily. Now that sucker's right here in that dashed red line right here. So you notice that price action was above. If it would have went above the 50, fine. Up, up, and away. If not, and we lose the white dash lines right here, that's the standard deviation center, the regression trend of the daily and weekly on the 1-year time frame. And after we had lose that, plus the 50 SMA, which is going to be this blue line right here, that dashed red is charted into our charts via code, so we can see it on the 5-minute, but this dash line right here, that's that 50 SMA. So once we lost that, we had a prediction saying, well, if we lose that, we have a walk all the way back down to the -1. Now that's these yellow deviation lines. So once we lose the center, we'll have a magnet down to the -1 daily and weekly Fibonacci point, or standard deviation points. And we are pushing standard deviation oversold. Now this is forever calculating, right? So we have consolidated for 3 days now, but this low was inside the -2. Okay, so this red level right here, that's the -2 on the 30-day. So the standard deviation -2. We came into a gold level, very, very important level right here. Actually was the perfect bounce point, and we were short to gap fill anyway from the 50. So if you went under the 50 SMA daily, we're going to come back down to the gap fill. That was the prediction, 423. We did hit that. We've been consolidating for days now, so what's next? Well, as we look forward, we created another higher low here. Let's look at a little bit longer standing time frame. I'm not huge on 4-hour. I would do hourly usually. We could do that in TradingView now, but 4-hour is giving us a little bit of a temperamental relax here and potential long setup as well as the 30-30 we'll go over in a second. But mainly the deviations are what you really want to pay attention to here, these giant yellow dashed lines. Holding and consolidating around these deviation points can cause a nice temporary pop up, really good for day trade, short-term swing, selling puts. So selling puts at the gap here for the week could be perfectly fine, I think, in my opinion. Watching that and then monetizing that further would even be a potential, because if this comes off the -1 and you could roll that and it keeps pushing into like the golden trend line again, we get that break back up. We could actually squeeze back up pretty good here to some back test of not so heavy moving averages that we have seen. This purple hidden one that we have here, we call this the 666 SMA. This guy right here was a break, and we had no back test. So interesting confirmation points are kind of setting up there for back test. But on the 4-hour, we got some crosses, got some oscillation. We are kicking into potential higher low territory because we did kind of break into the halfway point of IRSI, right? Came back down, sets a small amount of lower high, lower lows on the 4-hour, right? And we're pretty extended. Now, again, the 1-year daily, right? These big yellow -1 deviations. Let me show you what the weekly looks like on a 1-year. And we'll show you how often the market gets outside of a +1, -1 deviation, okay? So weekly chart, these yellow lines are +1 and -1 deviation, okay? For the last 365 days consecutive to today. So going backwards here, here's the -1, okay? That's the last time it hit a deviation. All the way up, here's the +1. Price action down, scooted over, left a gap, but almost +1 again. down, -1. You see the pattern that we're playing here? All the way back up, and there's another +1 hit right here, -1. So those yellow lines that are above or below the regression trend, that's the center gray line, so our +1 or -1, those lines are very, very strong. So you can see that one we're just talking about here, that high, 459.44. As far as support and resistance, the likelihood of a 1 year deviation weekly getting outside of one extension, +1 or -1, is very rare. It would need extreme catalyst. We are sitting on the -1. This is a bounce point, true and true for technical analysis and risk management, plain and simple. So when we get back into this, let's look at our smaller time frames like the 30, 30, and 15s to try to get that entry. So let's take a peek at the 30, 30. 4,300 is a big psychological level that futures are defending. The deviations are obviously daily and weekly, yellow right here. Huge defense right here. If we do start to kind of cut back down there and go in fall, so be it, that's fine. We are still at a very good risk management point to hold here for a temporary pop back up and a little bit of reverse. Now, you notice on the 30-30, the moving averages are getting a little traffic jammed, right? We had a recross here the last couple of days. We had the 50 come back over the 100 right here, then crossed again today to the downside as it's slowly poppy, choppy, getting kind of antsy there at these levels, because we still have that higher low. We still have a gold trend line we're very close to. You notice that sucker right here. Let's talk about algos now. So when you get those confliction points, you get a lot of static price action. You get just a lot of just chop, pop, chop, pop, chop, pop until it makes a decision, especially at gold lines. Those are our historic support resistance that have multifaceted hit points that need to be never ignored. So 425.84 was our over-under. Now, if we gauge this as a higher low and we see, okay, well, we have really good consolidation for 3-4 days here. After the gap fill, we did hit lower high, lower low today. It doesn't really matter too much unless we're trending under the deviation. So if we do happen to get outside of that weekly deviation, 1 year and daily, weekly deviation 1 year and down past these lines, 100% rather. So that would be where you're going to go, 421 and some change. So 421 and some change, sure. Is it possible? Absolutely. Probable? Not really. But enough for a bounce. So if we get a little bit of a temporary relief rally, we're going to set to play that in the next couple of days here, obviously pending on news. So let's look at our algos lastly. And what was so interesting today about those. Now, we had a 5-minute gap here this morning that I wanted to get all the way back up to, okay? And that gap right here was in pre. See the big channel right here. Now this gap right here on the 5-minute, that algo, very interesting because not only that was support before, you see the gold right here? That's a golden trend line. So the algorithms were watching this. They knew it. They bounced right here and created a gap to the downside here. Now when we opened, I said I wanted to get long and go back to the gap, and that would be about the long essence of the day. I wanted to get all the way back up here. We made it to literally just before it. We hit the 666 and the 200 cross. So we did get the long move that we anticipated. No overhots, so kind of lackluster there, and setting up for further longs later because we weren't overzealous on the top side there on oscillation indicators, but we did almost get that. Now, let's take a peek at the VIX, right? And this algo is something that you're going to want to pay attention to as well, because this one is not really hidden, but she's there. So this was a choppy, ugly day on the VIX too. This helped us out a lot. And I said we were going to stay long biased until the VIX stayed biased to the gap fill on the market, so on and so forth on that VIX runaround. So we opened up in this gap, came down, hit support, and then finally filled that gap. Boom, end of day, and then it let loose. Now that gap is filled on the top side, which was going to allow VIX to continue lower for the potential, okay? Because we had a gap above it. We needed to fill this opening shutdown gap from 8:15 Central to 8:30. Now that's gone, so we can delete that. Now notice something intraday. Big old tail, big old algo. Where is that algo? Right on our magic 666 simple moving average. Very interesting, right? Let's look to our right. Eyeballs. Wow, big fat gap. Algos don't lie. Never do. These computers talk to each other so much. Now look at that interesting intraday, right? And now look where the body of it is. There's a gap. This is going to be the new confliction point and mass watch point for tomorrow, right here. Okay, so that right there, gap, whether we trail down a little bit here after hours, depending where the gap, or where we open up here, opens up through midnight 1-2, get some volume in here, central, and then see this VIX. If we happen to fill that gap and then continue lower, we can get the rally in the market that we need to kind of continue. If we don't, and it wants to hold that gap and kind of continue down, that's both anybody's game. Then it's going to come back to haunt us, which is fine, no big deal. It's just intraday gaps. But right now, being stuck here at this green trend, and we're having a whole bunch of oscillations saying that we're kind of on cooldown. Let's look at some of the oscillation here. Low RSI after a high, backside on the histogram here, lower high as of today, stuck under the 200, and stuck under, most importantly, some deviation. So if we go back to the 1 year, let's back up a little bit. There we go. So with that being said, the weekly deviations here, we might not be stuck under, actually. We might actually be under that yet if the after hours didn't kill it. Oh, we're not there yet. Okay, so those deviations, we have that algo right here. That 5-minute one's not to be ignored. That's where the body is right here. But what was I saying? The gap here. And then once we got a trend under the deviation points, that's what we got. We have to get stuck under the deviation points. So we're looking for that gap to hit, that to continue its worth down. So that'd be about it. And it did swap to the upside, right? That deviation on the intraday. So we're looking at that 1 minute we're upsided right now. So you see all the regression trend and everything pointing up. We're going to go to the 5 minute, see what that says. Downtrend still. And this is why we watch. So the temporary 1 minute hold uptrend on the deviation, you're going to look for it to swap, right? So the 1 minute, 1 day, 1 minute, see how it's all uptrended here? All those lines are up, right? You're going to look for that to turn down tomorrow into the next day. And that's what's going to rocket the market up in the short term. So in the next day or two. 5 day, 5 minute right here. We're coming off a very high cycle, okay? 5 day, here's the +1. We were up into the +2 just the other day. Insane. So that's, again, why we're going long out of the gate, because we are deviation high. We are above +1. Very rarely on the 5 day does the VIX come outside of that. If we back up, this is a rarity up at 2.3. That was the biggest please long the market ever. That was the gap fill day, okay? So that was a huge, huge, huge pressure. Now we've calmed down. We've consolidated. We came all the way back down to a -2, got bought all the way back up to a 1.5, and now slow death deviation, right? So we're going to look to come back to what? The center, and then the -1 territory on the bottom, so the VIX can continue the downtrend, hopefully after it fills this intraday gap it left right here. So that would look like this. Here's the regression trend. Hold, push, breaks through the center, all the way down to the -1, okay? And then if we stick down in that channel, we're already in the bottom channel of oscillation, So it all right now is leading to that 1 minute swap to the downside in the faster time frame. And if we look at some of the other stuff like the 30-30 and so on and so forth, we have a really good opportunity for some pullback. We're in the +1 and the 30 as well. And we just need to start cutting that down and chopping back towards some VIX to relax, which can completely happen because we did have that MAC cross earlier this morning with this gap, the fill, right? And then we have now danger zone breaking from the lower high oscillation here on the RSI, lower high MAC. It was telling you that the VIX was going to let loose to that downside for quite some time, all pre-market and so on and so forth, or even though it rallied, we're just coming into a lower high point, right? Just look to your left, definite lower high point. So as these come back down, fill that gap, we're going to look for sub 17 on the VIX. So coming into tomorrow, that's what we're going to look for, and the continuation on the bounce. ES and SPY are still oversold in my opinion, and we can do 30-minute and 15-minute upside. So through the night, I implore you guys to watch anything above 4,300, okay? And that would be a hold point, even if it sold off a little bit and tracked back around, because I think once 4,300 has been defended for so long, we're going to get that upside momentum back up. And then where does that leave us, right? Probably back up towards that 50-point Fibonacci on the golden frame. So the one thing you got to worry about, I will give this one out for free here, but between these golden strats right here, this is going to be the detrimental 50 fib. So the over under 43.30, let's call it that. 4,330, that's going to be huge. So in between your 50 fib and 61.8, that is a golden pocket, right? So we're going to utilize a hidden Fibonacci system right there. And we're going to go, okay, well, we made it back to that 50 waypoint. Are we going to come back down, consolidate, hold, right? 78.60 fib, move up to 38.20, and then back to the 0 fib, because that's going to be the move, okay? So anything related to holding 4,300 above, we are going to push 43.57. And that would be back towards that 50. And even more than that, we could oomph that a little bit. I mean, we do have confirmation on a lot of longer standing time frames, like the 100 EMA there, next day short confirmation. But long story short, we haven't seen that 10 SMA in a while, either on the daily. So I would start targeting stuff up near the daily charts 10 SMA for a temporary relief rally that holds somewhere in that 4,300 range, which we've defended quite well. So I think something like that would pop up, break it high, or let's say it just has another lazy day and catches up. But either way, I want to see a long into the 10 SMA daily, and then further consolidation. We might not get too much crazy on the rest of the week here, but that is the outlook. So where are we going to go for the final target, which we talked about this morning for the bonus round, would be to the gap, okay, on SPY. So if you guys are unfamiliar, we do have that gap down right here, and that's where you'd want to push to, because the faulty no gap fill roll is one of our favorite plays here, and that's what happened last time here, 52-week high. So remember this high? Here's the gap, this big gray box. What did it do? Price action tagged gap, no fill, okay? And that pattern could replay here. Support, massive, come all the way back up to the 430s mid. And then if it wants to go down, great. But if not, consolidate, boom, 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 and then back to rip rally mode. Because we haven't really seen any kind of detrimental volatility except for a slide in the volatile months of August and September. So we'll see if this trend line gets back up for a back test, because if we look at this golden trend line right here, I know it's probably hard to see, but right here, we did a break over here with no confirmation. Here's resistance on that trend, resistance on that trend, resistance on that trend, breakout on that trend, back test of that trend. And then to continue back up to where that gap is. And then if it wants to do that, great, higher. Okay, that's the prediction. Let's see if that VIX gap fills out, and we're correct. Tune in for the next.